Good morning, folks, and welcome to another episode with Bob Iaccino. Today, we're going to talk about how to identify and avoid the most mistakes that traders make, especially in the beginning of their journey. Bob, how's it going?
Are we on?
We are on. Yes, Boomer.
Hey, how is everybody? Good to see you again.
You know, quick 60-second detour on my end. I don't remember
Shoot,
what Bob texted me. Oh yeah, I send Bob a StreamYard link, folks,
you
every
guys
week.
should see this.
And you know what I was going to do is going to do a side-by-side picture. I'm going to do that for
Yeah.
next week, but I go ahead and text him or email him the link. He emails me back the morning of and says, "Hey man, I don't see a link." I checked the email on my phone, and there's literally a link, and I sent a screenshot with the circle, and I'm like, "Hey, there's the link." He's like, "Oh my bad." This morning, I send him a Google sheet with all the topics, all the links for the next 2 months. And he responds back and he says, "Hey man, I don't see the Google sheet that you're referencing." And then I once again show him how a hyperlink works, and it's right there. So what do you have to say for yourself before we get started?
It's funny. I don't have. Normally, I would click on something and then say, "Okay, I'm
It's right
missing
there.
it." Yeah,
You
that's it
literally
right there.
says, "I don't see a Google Sheets below," but I
You
doesn't
know
make
what it is?
it's literally right there.
So you know how your brain eliminates all the periphery stuff and just focuses on the thing that you're focused on. Like right now, I can see my camera and I know there's stuff behind me and there's stuff going on my TV up there and all that, but I don't see it, right? Every week you send me a StreamYard link and it's one line. I'm like, okay, there's my StreamYard link. Where's the Google sheet you're talking about? Because I expected a link below that said Google sheet. And then you click on, but you did a hyperlink for all of it. So that again was me being 112 years old. I'll be 113 in September.
It's amazing. You have made hundreds of thousands. I don't pocket watch. I don't know what your P&L is, but
I'm a multi-hundredaire.
you today have learned what a hyperlink is and how it works.
I made money today, and I don't know what I do know what a hyperlink is, but I just figured there would be two individual links, and
That's
I forget about the laziness of your generation, putting them all in one link.
I'm only going to spend 10 more seconds on this. The Google Sheet I sent you, by the way, automatically highlights the link you're supposed to click on for that week. So the previous ones get scratched off, and that currently.
Yeah.
But okay, let's go to make fun of other people in terms
As
of.
I actually write stuff on my to-do list. Go ahead.
Let's make fun of other people and the myths that they go ahead and believe. I'm just going to rip off a few that I know people believe in, and we will just kind of go ahead and kind of go from your way, yeah?
Yep.
Okay, cool. I think the number one myth that people believe in is that the more screens you have, the more money you will make because the more information you are able to gather.
I know a trader. I know him by name. I'm not going to say his name because some of you may have heard of him. And when you look at his trading room, it is one entire wall of a room of screens, right? And I kind of chuckled the first time he said, him and we get along really well. And I kind of chuckled the first time he showed that to me, showed me his trading room. He's like, "You got to see my trading room. It's great." And he showed me the trading room. He's like, "How many screens do you have?" I said, "I have a laptop." At the time, I was working on a laptop. It wasn't because I didn't want a bigger screen or couldn't afford a bigger screen. It was just fine. I do my analysis one screen at a time. So people have these screens up and they're getting alerts flashing and all this stuff. And what he does is he takes it and he drags it down to the same screen to look at it, And I always thought it was strange because you can have tiny little screens, like depending on what platform you might pay for. Yeah. Some platforms will give you 4 screens, 8 screens, 12 screens. I can only really trade 2 assets at one time.
Yeah.
Really. Now, longer term positions or medium term positions, what most people would call swings, you put them on, you go on to the next thing. You might end up having 6 or 12 trades on at once, but I can only operate on one screen. So the idea that you need a lot of screens is absolutely a myth.
All right.
It's a cool factor.
I think it is. I think it's a cool factor to make you feel like alpha so you can find alpha. And
Sure.
So you think that, I need this screen to monitor options activity. I need this screen to monitor the SPY, and then this to monitor my ex-girlfriend's Instagram account, whatever it may be. I think it's just a myth on my end that I've seen plenty of times. Let's go to you. What's a myth that you have heard from traders over the years?
I understand my risk. I am my own risk manager. Now, that's more of like, there's a saying by Mark Twain, right? Um, it's not what you don't know that hurts you. It's what you think you know for certain that just ain't so, right? There's another one, Jonathan Swift, who wrote Gulliver's Travels, and I'm going to butcher this one, so I'm just going to paraphrase it as best I can. You can't reason a person out of an opinion which by reason they didn't develop in the first place, right? Risk management, in my view, is done by one thing and one thing only: the size of your position, right? And the reason I say that, and I've said this, I don't know, Z, what do you think, 2 million times in these sessions,
Yeah, I've been counting.
is that if your risk is not managed, if you're saying, I'm only going to lose $100 on this trade, and that's where you put your stop, it just ain't so, right? Because first of all, especially if you put it in the very wrong place, you're going to have more slippage than you need to have. And your risk isn't managed because it can blow through that stop without filling you. You may not get confirmations on prices for hours. When you sign documents, it got worse electronically. When it was open outcry, okay, there were certain factors that were just going to be your fault, and that's that. They would not bend on it. But once it went to computer screens, all of the platforms have documentation in the doc, or they have warnings in the documents you sign. Power goes out, it's not our fault. You're on your own. Everything is a force majeure. Is everybody familiar with what force majeure is? Basically, it means an act of God. So, in other words, let's say, Z, that I know you used to be in Georgia. Let's just say you still are. I don't know where you are now. Let's just say that one of the hurricanes that hits me in Florida goes across and takes your power out for a week in the middle of a trade. You're on your own. Whatever you lost,
Yeah.
right? So you never have your risk fully managed. And the reason that that's a myth for me is that people don't take that and say, I need to do everything in my power to make sure I don't blow up, even before I do anything to make sure I make money.
Yeah. All right. I appreciate that one. Let's go to the next one, which is the more indicators you have, the more successful you will be.
No, it's the more indicators means the more confused you will be. And also usually the more timid to put on a trade. If you need that much confidence in your system, I would say this: if you have a lot of indicators on your charts and you need all of them to line up, okay, the first thing you need to do is track the results of your trades. And when you have a decent data set, let's say 6 months worth, even though that's not enough, but let's just say 6 months worth, okay, then go through all those and see which ones worked and dial it down to which of your, let's call it 3 indicators total, have pointed you in that same direction on every one of those working trades, and then get the rest out. Because it is just a source of confusion. What do they call it? Paralysis by analysis.
Yeah.
Comes from way too many indicators. Also, indicators, the name comes from indicating something, not confirming something.
Mm-hmm.
So you need another overlay, another process that confirms that you want to do this trade, regardless of what your indicator is indicating. Okay, you can't say my indicators do this, I do a trade. You got to say my indicators do this, I've confirmed it's at a valid point on a chart that my indicators have pointed to this. Now I'm going to do a trade. That's just an example. You want more filters that you've developed and fewer indicators.
Whenever I deal with indicators and things like that, I'm looking at my screen right now because I have 3 because I'm semi-profitable. I have the VWAP and I have my support and resistance. That is all I have. I don't have any other EMAs or anything else whatsoever. Those are the only things I have. And man, I might share a screenshot later on about how I missed my profit target, the second profit target I had by, I think maybe like half a point.
Mm-hmm.
I went ahead and hit my stop loss underneath after I showered, and it was just the most expensive shower I've taken this week. It was ridiculous. But anyway, I just need to get that out there.
Can I ask you a question about this specific trade real quick?
Yes.
You hit a first target and a second target and you had not tightened your stop up. There's your problem. It's not an indicator problem, as we know. Look, I will tell people this. I think what a lot of traders do, and how about this being my myth?
Yeah,
right?
yeah.
I should never turn a winner into a loser. is a myth. In other words, I should always take profits and make sure that a profit is taken prior to something becoming a loser.
Yeah.
Anytime, my view, anytime you're taking less risk or you're tightening the risk, even if that gets hit, it should go in the positive category because you took a trade and did not take a full loss. And a full loss is the loss that you expect to take on a trade if it doesn't go your way. So anytime you cut that into 3/4 of a loss, half a loss, a quarter loss, that should go in the win column. It should go in the positive column emotionally because you're doing the right thing. Because over time, you end up with a money factor that's higher than if that would have gone to a full loss. Also, the money factor ends up being higher than if you would have taken a small profit instead of letting it go to a loss over time. Because a lot of those small profits will take away the bigger ones that you would have had you just enforced a trailing stop. Don't use trailing profit, use trailing stops.
Now, but
the only action you should never reduce risk, only increase it, is one of my facts of trading.
It was actually, so what I traded was on a security, a double bottom that formed at the start of trading at 6 p.m. and continued overnight and whatnot. So that's what I was trading. Okay, let's go ahead and move on to another myth, if you will, is that a high win rate means that you're profitable. Duh.
Yeah,
you're batting 900.
You know that's a myth.
Of course.
Because
well, so
again,
why, right? What is it that people get wrong?
It goes to money factor, right? A high win rate means you're profitable. If you're risking $1 to make 10 cents, you'll have a high win rate. I guarantee you will, because every time you goes to a 10-cent profit, you're covering it. But you need 10 winners in a row to cover one loss. Yeah. Right. So generally, when somebody has that high of a win rate, people in options have really high win rates like that. They sell just out of the money calls or way out of the money calls, and they make a little bit of money each time through expiration, theta decay. And then all of a sudden there's an explosion like we saw around the Iraq war, around the Ukraine war. And the reason I'm rattling these off is because they happen all the time, and then the oil shock subsequent from the Iran war, and then the multiple ceasefires that were announced. There were several different ceasefires, and then the multiple resumption of violences after those ceasefires. And there's all these flashpoints, and all of a sudden you're losing 2-3 in a row. Well, now you need 20 or 30 wins to make those up. And those are hard to come by. 30 win streaks are really hard to come by, even if you're one of those persons that do that. You need no volatility when you have a high win rate like that. But if your money factor is good and you're winning 90% of the time, does everyone know what I mean by money factor? I should explain that.
I do not know what money factor means.
Okay, so the money factor in trading, how much do you make per trade versus how much do you lose per trade? So when you win, how much do you win? And when you lose, how much do you lose? And that is the only factor that matters when looking at your win rate, right?
I'm mine up right now as you speak. Go ahead.
Go ahead. So I will tell you right now, mine is 1.27. I make $1.27 for every dollar I lose.
Okay, got it.
Right. So that tells me that I can win just under 50% of the time long term and still make money.
Yeah.
So now I'm able to say, okay, that's great. I want to win right around 51% of the time with that and keep that same money factor. That gives me a lot of confidence to take trades. I have 10 years of data on this, and that's about where I fall.
I am looking.
Your laughing bothers me here.
No. It has nothing to do with you. I'm looking at mine. I'm trying to see what I should and shouldn't share. Give me a second. I don't want to promote someone's product or whatever. Okay, here is mine. Okay, this hasn't been updated. I just want to clarify that.
Fair enough.
From this morning or last night's trade or whatever. So this is from Friday's P&L, but the win-loss ratio. So I have won less than 50% of my trades. Anytime I take a trade, my expected loss, it's like this doesn't make sense to me, but I think you're talking about the Sharpe ratio or the profit factors, which you're referring to. Is that
sure, it's the same thing.
Trade, because you want to be above $1 is what it is.
Absolutely.
Right? You want to be above
$1. I do.
Yeah. But that's the aspect of it. So like here's another thing where it's like anytime I win a trade, I win $245. Anytime I lose a trade, I lose $248. And as you can see, Friday absolutely sucked for me. It was,
Okay, so
but yeah,
go back to that thing on the right there, the top right,
yeah,
because that's the simple explanation of it, right? That's your profit factor. If you do that math, you're going to find the same thing, 0.99 cents, approximately 0.98, 0.99 for every dollar you risk.
yeah,
You need to win right around 52% of the time to make money long term,
yeah.
right? So your decisions are clear in front of you. Make more, lose less in
Hmm.
dollars, or win more of your overall trade. So those 11 trades, right? You need to win 6 of those and lose 5
Yeah,
approximately to make money. And the math is very elementary. Everyone can do this math.
yeah.
It doesn't bother anybody. It's not hard to do, you
I'm also
know?
laughing because so you can see that it says 1 win and 11 losses. I want to clarify something real quick before people ask for me to be fired as a host. I go ahead and scale out of positions. Therefore, I will place like, hey, buy orders of 25 shares, 50 shares, 75 shares, 100 shares. So when my stop loss hits, it's one trade, but it calculates it as 4 trades because it's
Yeah.
4 different stop losses.
That's why I don't care about that, right?
Just want to clarify, folks. I promise, I'm not that bad, doing okay. Um, but anyway, Friday was brutal for me. And
Yeah.
I will say this, and we kind of went on a tangent. I love it because it's all authentic. Friday was brutal for me. I lost about $650, right? Forget the money aspect of it. But what I loved about Friday, outside of my net worth going down, is that I wasn't angry at myself. And I say that because I
Huge
reflected
victory.
back. I reflected back. I hopped in the shower and I didn't cry because I followed every single rule, every single checklist, and I was okay with it because it's like, okay, I didn't double down, I didn't average down, I didn't do this, I didn't do that. I followed all the steps that have made me money for the past years, and I lost. No worries. We'll
That's
bounce
a
back tomorrow.
huge,
You know,
huge victory. I'm telling you, that is big, dude.
so it
That
was,
is
it was
big
a great
because you
feeling.
realize that.
Yeah,
Now, once you get to the point where you follow your rules and you don't cry, now you can honestly start looking at your data
yeah,
and say, okay, I did everything I was supposed to do. How does this look over 10 years? How does this play out?
yeah,
Go look at all the data. That is, it's weird because that's the work of trading. Okay. People think, well, I only worked 2 hours today. Well, you're not going to make it unless you already did the work I'm talking about right now. That's the work. That's the boring stuff. Oh, it's got to be exciting. You had an exciting day on Friday or you had an exciting day on Wednesday. No, I was actually just looking at my notebooks.
yeah,
That's your job.
yeah,
That's your job. And that's where you get yourself into the position where, if I didn't do things like I'm doing right now, this show, I do a show for another group. I have my own show and I have one client that the client is the CME Group. It's the exchange, right? And I always kind of look at the CME Group as giving me the life I currently have in part. I'm not like one of those entrepreneurs that said, no, no, the roads and bridges didn't help me. So the fact that the CME existed allowed me to become who I am. So I'm grateful to that to a certain degree.
mm-hmm.
They pay me a tiny amount of money for some content. So I do it. I know the people, I've known them for 2 decades,
Yeah,
and it's still the same people in larger roles, but we all kind of came up together and they asked me for content. So I do it.
yeah,
If I didn't have to do that content, and I don't have to, if I didn't want to do that content, I'd be working 3 hours a day right now because all of the work I did before, and
yeah,
I probably wouldn't work at all on Fridays. The Friday we do our newsletter, so that's my thing.
mm-hmm.
I wouldn't work at all on Friday if I didn't do any of this other stuff.
Yeah,
When you look at what you just told me and what you just showed me, you're right there, man. You're right there.
yeah,
You're literally right there. You're that sandwich shop who's
mm,
at break even and they
yeah,
just need that one or two more customers. You need to figure out that one or two tweaks to your own process
yeah,
to get either the win rate up or the profit factor up just a touch.
yeah.
And you're like, I'm
And
good. And then
and
you
you
just build the wealth.
Yeah. And like, so I want to actually, and again, this is good stuff. So I'm going to continue. This is, again, not, I don't want to show any logos or whatever, because I'm not here to promote it, but it's just kind of like the
Yep.
real, like I trade, right? And I have not made $1 million. I think we talked about it on this show when we talked about our losses. I lost about $98,000 during COVID, the worst that I ever was. And then I thankfully made back some of it. But this is like real life stories that you're hearing, folks. What I love about this is, like I said, my bad. It wasn't Friday. It looks like it was Monday, yesterday, where I went ahead and lost. But today I went ahead and made 900, right? So my point being is I was in the mindset in the past, and I still deal with it, where if I'm down five, 600, I am no longer trying to just win a trade. I am trying to win five, $600 because I can't be red for the day, because I want to be the trader that won 10 times in a row in a day and hasn't had a losing month or whatever the case may be. But it truly is that, like, okay, just like the stock market, right? It'll go up and down, but your good days will be better than your bad days. And that's how you'll be able to kind of climb up. So, okay, that being said, we know what people get wrong, and I want to spend the next couple of minutes of we know what people get wrong in terms of the mindset of trying to get rich overnight and all those things. But are there any tangible things that individuals can do that are watching to help them emotionally get in the right headspace to become a better trader on their way to profitability?
So tangible. That means how can they
Right.
change their
Yeah,
current
like what
actions,
steps can
right?
they take after they watch this webinar that they're able to the first step?
This is gonna sound stupid, man. I'm telling you, this is gonna sound so stupid. Wake up a half an hour earlier than you do now and don't look at your screens. Okay.
Okay.
Most of us would probably, if you're a full time trader or even any semblance of a full time trader, you're probably up before the sun on most days.
Yeah.
Okay. Whatever you do, tea, coffee, you know, Celsius energy drink, I don't care what it is.
Yeah.
Go do that outdoors. It's summer for most everyone I'm talking to. Not everyone, but it's summer for most everyone I'm talking to. Go sit and have a cup of coffee or a glass of tea or whatever it is outdoors and read a book, or don't look at your screens. Okay. Ben Wilcox. I got to wake up at 4:30 a.m. Look, sleep is valuable. Go to bed a half an hour earlier, you degenerate.
Yeah.
No, look, take a second where you're not looking at your phone, you're not looking at social media, you're not looking at your screens. That is the number one thing for me, because what that does for me, and I'm older than most of you. All right, I'll be 60 in September. I know I look great. Get past it.
It's because you wake up at 4:30 a.m.
I do. Well, I honestly, I wake up at 5:45. Okay. And the first 20 minutes of my morning, I have an espresso machine. I make an espresso and I sit in my yard or out on my little patio, and I just sit there and I look at the sun if it's up, depending on what time of year it is. I read a book. I just finished reading a book on a brief guide to the history of the USSR. I put an extra S in there. And now I'm reading a book called I forget what it's called. I think it's I don't remember what it's called.
Yeah.
I have it right here. It's a book a friend of mine wrote that he sent to me about his goal to play the top 100 courses in the country, or I'm sorry, in the world, to travel around and play the top 100 courses in the world.
Yeah.
It's called A Fool's Errand. That's the book. And I just started it. Okay. So now I'm reading this. I don't know if it's fiction yet. I don't remember him doing the top 100 golf courses. So maybe it's his errand that he failed at that he's finishing in the book. I don't know.
Yeah.
I read this book and you get yourself in this mindset of like, all right, life's not bad. Okay, what am I doing now? And you sort of grounds you. Whereas when we go right to our screens or right to social media shows you people's lives, their fake lives, the only stuff they want to show on social media. Also might get you angry depending on what end of the political spectrum you're on and what bubble you're in per social media. But if you get this sort of mindfulness part down, you can get yourself to the point of saying, okay, I'm Zunaid. I had a really horrible day, but I followed my path. Cool. I did my process. I did exactly what I'm supposed to do.
Yeah.
So I can't be mad about my losses or any of that. Okay, let me do this again now. Let me do the exact same thing and start to get to the tangible point where what you do is your process, not your wins and losses.
Yeah.
Because once you got that down, you can make tweaks. If you don't have it down, don't make tweaks, man. You're just killing yourselves.
Yeah.
I sound like a guy from the 70s. Man,
Was there more to your 70s?
No, there
Oh,
was not.
yeah, I
I
wasn't
did
sure.
do that Kardashian inflection at the end, so I
Yeah,
understand why you thought it might have been.
yeah, I thought you might have had something there.
I got nothing.
One additional thing I will say before we hop here in 10 seconds is as people journal their trades, right? We've talked about it here. Of course, you see that I have my trades automatically journaled based on the platforms I use.
Yep.
Um, I would also journal if you showered that morning, in the sense of, did you get ready for your day, or did you roll out of bed and open up a screen and try to make a decision? You know what I mean? Like that mindset that you were in, which unlocks a different level of thinking, I believe, than you would have originally had, right? I notice it here too. There have been days where I've done webinars with you and other educators where I'm like, holy shit, I could have been so much better. And then in my head, I'm like, I didn't get ready for the day. I had just, for whatever reason, if I'm traveling, I'm 3 hours behind and I'm in the Pacific coast, like, oh, okay, it was like 8 o'clock. So I woke up at 7:50 and I just washed my face and I hopped on camera, whatever the case is. You know what I mean? So I think those things definitely go ahead and play into things. But awesome.
Yeah, no, I get ready. I do.
Yeah,
Even,
absolutely.
I mean, I work from home. You could see I've got a collared shirt on. I work from home. I get ready.
I won't even ask you if you have shorts or long pants on, but that's okay. We'll leave that for another episode.
I have dungarees.
I don't even
know what those are. I just think that word is funny.
Okay, okay. We're gonna leave here. Anyway, disclosure. I think I played it before, but again, our ridiculous opinions, entertainment purposes only. Do not trade based off of what we said. Do your own due diligence. Have a great day, and we'll see you tomorrow or next week.
Thanks, guys.
Bye.
We'll see you.